For 50 years, silver was trapped in a cage. While gold soared to new heights, silver remained stuck below $50. That cage just exploded. Silver smashed through its 50-year ceiling and is now preparing for the most explosive move in modern financial history. We're talking about $300 per ounce by summer 2026. The physical market in China is already $30 higher than Western prices. Bullion dealers can't fill orders. The pattern that predicted every major silver surge in history is flashing red right now. If you think you've missed it, you're dead wrong. The real move hasn't even started yet. This is the Bullion ledger, where we decode the biggest wealth transfers on the planet. Hit subscribe right now, because what happens next will either make you rich or leave you watching from the sidelines. Let me show you something that will blow your mind. From 1980 to 2025, silver hit a wall at $50 and never broke through. Gold during that same period went from $800 to over $2,700. Copper made new all-time highs. Even industrial metals that nobody talks about broke their old records. But silver stayed locked in a prison for 5 decades. Think about that pressure building for 50 years. Every time silver tried to break out, it got smashed back down. That created the most compressed spring in commodity history. Now that spring just released. Silver didn't just touch $50 this time, it blew right through it and held above that level. This isn't a temporary spike, this is a fundamental structural shift in the market. When something breaks a 50-year ceiling, it doesn't politely go back down. The old rules are dead, the old ceiling is now the new floor. And everything that was compressed for half a century is about to explode upward with unbelievable force. History doesn't repeat, but it definitely rhymes. And silver has a very specific rhythm that has played out twice before. Let me walk you through it. In 1979 to 1980, silver went on an absolute tear. It surged rapidly for about 5 to 7 months straight. Then it crashed hard in the middle of the rally. Everyone thought it was over, but then silver came roaring back and hit its final peak at $50. That crash in the middle wasn't the end, it was a pit stop. Fast forward to 2010 and 2011. The exact same pattern happened again. Silver surged for months, crashed violently halfway through, and then rocketed to its final high near $50. 2 major silver surges, 2 identical patterns. Now look at what just happened. Silver surged from its lows and recently crashed from around $90. That crash wasn't the end of the bull market. That was the jiggle in the middle. This is the exact same pattern playing out for the 3rd time in modern history. If you sold during that crash, you just made the biggest mistake of your investing life. The final acceleration phase is what comes next. And based on the previous 2 cycles, that final phase is the most explosive part. We're not at the end, we're at the beginning of the main event. The real fireworks haven't even started yet. Right now, thousands of analysts are looking at their charts and screaming that silver is overbought. They're pointing at RSI indicators and telling everyone to sell. They're about to miss the trade of their lifetime. Here's the problem. Those indicators were built for normal markets. This is not a normal market. When an asset breaks a 50-year ceiling, the rules change completely. What used to be resistance becomes support. The old top becomes the new bottom. Traditional overbought signals don't apply in breakout markets. They didn't work in Bitcoin's run from $1,000 to $60,000. They didn't work in Nvidia's surge over the last 2 years. And they won't work in silver's current explosion. Analysts who sell based on these outdated tools will watch in horror as silver continues climbing. The market has shifted into a new reality. The $50 ceiling was the old world. We're in a new world now where that ceiling is the floor. If you're using old maps to navigate new territory, you're going to get lost. Throw out the old playbook. This is a structural breakout, not a temporary pump. Here's where things get absolutely wild. In Shanghai, physical silver is trading $30 higher than the paper price in New York. Let that sink in for a second. The same ounce of silver costs $30 more in China than it does on the COMEX exchange in the West. That's not a small difference. That's a screaming alarm that the paper market is a complete fiction. China recently imposed export controls on silver. They're keeping physical metal inside their borders. Bullion dealers in the West are reporting they can't fulfill orders. Customers are waiting weeks or months for delivery. Some dealers have stopped taking new orders entirely. This is the physical reality. Meanwhile, the COMEX paper price is still pretending everything is normal. But paper contracts are not real silver. You can't put a paper contract in a solar panel. You can't hold a futures contract in your hand. The paper market has been used to suppress prices for years, but physical reality always wins in the end. And physical reality is saying there's a massive shortage. When the gap between paper and physical gets this wide, one of 2 things happens. Either the paper price crashes to 0 because nobody trusts it anymore, or the paper price shoots up to meet physical reality. Guess which one is more likely? The $30 Shanghai premium is a preview of where Western prices are headed. Physical demand is overwhelming paper manipulation. Silver is facing 2 massive waves of demand hitting at the same time. The first wave is industrial. The second wave is monetary. Let's start with industrial demand. Silver is essential for solar panels and electronics. Every solar panel needs silver to conduct electricity. Every smartphone, every computer, every electric vehicle uses silver. And here's the kicker. Once silver is used industrially, it's gone forever. It doesn't get recycled like gold. For 5 consecutive years, the world has consumed more silver than it produced. That's a supply deficit that keeps getting worse every single year. The green energy transition is accelerating this deficit. Countries are mandating more solar power. Electric vehicles are becoming mainstream. Industrial demand for silver is structural and permanent. Now let's talk about the second wave, monetary demand. On April 1st, 2026, India will officially allow silver as formal bank collateral. This is a game changer. India has 1.4 billion people. They've always loved gold and silver culturally, but now silver becomes a recognized monetary asset by the banking system. Imagine what happens when over 1 billion people suddenly have a financial reason to buy silver. Not just cultural, but official monetary recognition. This has never happened before in modern history, and here's the secret most people miss. Throughout history, silver has always followed gold as a monetary metal. Gold goes first, then silver explodes. The gold to silver ratio right now is extremely stretched. Gold is expensive compared to silver. Historically, when this ratio gets stretched, silver catches up violently. Silver is undervalued compared to gold by historical standards. Once monetary demand kicks in alongside industrial demand, the price will have to adjust. 2 waves hitting at once creates a tsunami. Industrial users need silver to survive. Monetary buyers want silver for wealth protection. Both groups are competing for a shrinking supply. Silver doesn't exist in a vacuum. What's happening in the broader financial system is adding rocket fuel to this fire. Let's connect the dots. The US dollar's long-term momentum trend just broke. For years, the dollar was strong and rising. That trend is now reversing. At the same time, the M2 money supply keeps increasing. More dollars are being created every month. More dollars chasing the same goods means each dollar buys less. This is silent theft of your purchasing power. Precious metals protect against this decay. When currency loses value, gold and silver gain value. Now look at the bond market. U.S. government bonds are supposed to be the safest investment in the world, but they're cracking. If bonds drop significantly further, it could trigger a nuclear event in the financial system. When bonds fail, investors panic and run to safety. Gold and silver become the safe haven. Commodities across the board are breaking out. The Bloomberg Commodity Index is surging. Crude oil is jumping. And wheat prices are spiking. This is inflation waking up after years of being suppressed. Rising commodity prices mean rising inflation. And rising inflation means people buy monetary metals. We're also seeing a massive asset rotation. Money is leaving paper financial assets like stocks and bonds. It's flowing into hard assets like commodities, energy, and precious metals. Silver has been dramatically outperforming stocks recently. This rotation is just beginning, not ending. Let's talk numbers. This isn't just hype. There's actual math behind the $300 target. Gold historically moves in cycles. From its cycle low to its cycle peak, gold typically moves about 8 times higher. JP Morgan recently published a research note with an $8,500 gold target. That's not some random internet guru. That's one of the largest banks in the world. If gold hits $8,500, that's roughly an 8-fold move from its cycle low. Silver historically amplifies gold's moves. When gold doubles, silver triples or quadruples. Silver at $300 from its recent low would be about a 6-fold move. That's actually conservative compared to gold's 8-fold projection. $300 is the mathematical midpoint, not the ceiling. The upper range based on historical ratios could be $500. This isn't speculation or wishful thinking. This is pattern recognition based on decades of market behavior. Every major cycle, silver follows the same playbook. The numbers are just confirming what the patterns already showed. $300 isn't a dream. It's a destination based on math and history combined. And look, nothing is guaranteed in markets. Silver is volatile, leverage is dangerous, and government policies can change overnight. But the convergence of signals right now is overwhelming. 50-year breakout, historical pattern repeating, physical shortage, dual demand waves, financial system cracking, and mathematical targets, all pointing the same direction. Do your own research. This is not financial advice, but the opportunity in front of us is historic. If you want to stay ahead of the biggest wealth transfers on the planet, subscribe to the Bullion Ledger right now. Hit that notification bell. The next 12 months will separate those who prepared from those who didn't. Don't get left behind.